Gold and silver have been on an absolutely mind-blowing rally, just smashing records left and right. So today, we're going to dive into this incredible story and really try to uncover what is driving this explosion.
You know, the big question on everyone's mind is pretty simple. Is this a wake-up call to jump in, or is the party already over? Let's break down everything you need to know.
First, let's just try to grasp the sheer scale of what's happening. Gold just blew past its all-time record, hitting an incredible $4,642 an ounce. To put that in perspective, just a year ago it was trading around $2,600, a massive leap.
And it is not just gold. Silver crossed $93 an ounce for the first time in history. I mean, that's a jump of over 25% just since the beginning of January.
And if you want to talk about speed, just look at this. In only 12 months, silver has posted a staggering 200% gain. This isn't just a rally, it's an explosion in every sense of the word.
So, what on earth is going on here? Well, it's not just one thing. It's really a perfect storm of different factors, all converging at the exact same time. We've dug in and we boiled it down to 5 major drivers.
We're going to walk through each one of these. Some serious drama at the Federal Reserve, chaos around the globe, China making big market moves, a serious supply crunch, and of course, inflation that just refuses to go away. Let's kick it off with the Fed.
Okay, so on January 10th, the Department of Justice opened an investigation into Fed Chair Jerome Powell. Now, the official story is about a building project, but the way the market sees it, it looks like an attempt to influence interest rates. And here's the key. Whenever the Fed's independence comes into question, nervous investors run for the safety of hard assets. It's a classic playbook.
At the very same time, the world just feels incredibly unstable, doesn't it? With military operations in Venezuela, rising tensions with Iran, it feels like there's a new crisis every week. Gold and silver are the classic safe haven assets, and right now, money is just flooding into them as a refuge from all that chaos.
The third reason is a huge supply squeeze coming from the East. See, after China put export controls on refined silver, premiums just went through the roof. As one analyst put it, with a $10 premium in Shanghai, physical silver is literally disappearing into the hands of buyers in China and India.
And number 4 is a massive and persistent supply deficit. I mean, for 5 years in a row, we've used more silver than we've actually produced. Last year alone, demand outstripped supply by 230 million ounces. That creates a huge structural shortage in the market.
And finally, the 5th driver, stubborn, sticky inflation. The latest report has it at 2.7%, which is still well above the Fed's 2% target. When the cash in your bank account is losing purchasing power every single day, hard assets like gold and silver start to look like a very attractive way to protect your wealth.
Okay, so we've got a pretty good handle on why this is all happening. The next logical question has to be, where are prices headed from here? Let's take a look at the view from Wall Street.
And let me tell you, the view from the big banks is incredibly bullish. A really strong consensus is forming around that $5,000 mark for gold. You've got HSBC, Goldman Sachs, JP Morgan. They are all forecasting new record highs within the next year.
So why are they all so confident? Well, it's because gold has entered what's called price discovery mode. Basically, it's broken out into uncharted territory. There's no historical price ceiling, no old psychological barrier to stop it from continuing to climb higher.
But before anyone gets too carried away, we absolutely need a serious reality check. Any investment, especially one that has moved this far, this fast, comes with some significant risks. This really brings us to the core debate. On one side, the bulls are pointing to that price discovery mode and the fundamental supply-demand imbalance. But on the other side, the bears are issuing a pretty stark warning. Look, we've just seen a massive rally, and buying at an all-time high is always a risky game. Let's be really specific about those risks. First, pullbacks are totally normal, even healthy after a run like this. A 10 or 20% drop wouldn't be shocking. Second, what if global tensions calm down? That whole safe haven demand could just evaporate. Third, if the Fed surprises everyone with a rate hike, that would be bad news for metals. And finally, there's always that nagging risk that you might be the last person to buy in, right at the very peak.
So, with all of that on the table, how should a person even think about this market? Now, this isn't financial advice, but it is a framework from the experts on how to approach the situation logically.
First things first, context is everything.
Most financial advisors suggest a pretty small allocation to precious metals. We're talking 10 to 15% of a portfolio maximum. Think of it as a hedge, not your entire strategy.
Second, instead of just throwing all your money in at once, maybe consider a strategy called dollar-cost averaging. The idea is you break your total investment into smaller, regular chunks. This helps smooth out the crazy volatility, and it reduces the risk of buying everything at the absolute top.
And this quote right here really gets to the heart of it. The fundamental reason to hold gold and silver isn't to get rich quick. Yeah, the recent gains are spectacular, but historically, this is an asset for protection and for preserving wealth over the long haul. So, all of this leaves us with the ultimate question. Are we just watching a massive speculative bubble that's about to pop? Or are these new, higher prices the baseline for a new reality? The reasons for the rally are powerful, but the risks are very, very real. So, what do you think?